It's about that time of day again. My name is Joseph. Monday evening, it's already December 3rd. Welcome back to your nightly newsletter. I help new traders just like you earn consistent profits using a simple and reliable three-step trading strategy. And my plan this evening is to identify the best locations to find my favorite entry patterns tomorrow morning in my trade room. And tonight, I'm covering crude oil, S&P, Nasdaq, gold, and euro. Starting off this evening, crude is bullish with a flag pattern tonight, and that tells me to wait for seller failures below the moving average, with the key support being the top of that bear channel. We'll grab a look at that in just a moment. The S&P is bearish with a range tonight, so I'm looking to fade those breakouts, selling above those highs with a target down at those lows. Don't forget Nasdaq. Nasdaq also bearish, also with a range this evening. So I'm going to sell the high of that range using that to try failure pattern tomorrow. Gold is bullish with its own range as well. So my plan is to buy the low of that range. Going to focus on seller failures. And I got a hidden channel on the gold to look at here in detail tonight. So stay tuned for more on that. And the euro is trading nice, cool, calm, and sideways with a triangle tonight on the euro. So my plan is to fade those breakouts, buy low, sell high, and focus on failures on Tuesday's session. Well, we're back in the action once again. Did you miss me? Boy, a lot happened over the weekend. We get a new week, a new month, and a whole hell of a lot going on this week, which is going to give us plenty of explosive opportunities going into this first week of the month of December. And as always, I got a great newsletter in store for you guys and gals tonight. We got plenty of reliable trading opportunities setting up for tomorrow morning. But before we get those charts, I need to remind you, make sure you never miss a video by joining our mailing list. All I need is your name and your email address right at the top of this page, and I'll shoot you an email every time, right, something is new. Also, don't forget, if you're not joining me tomorrow in the trade room, the next best thing, if you're not with me in our trade room, is to download all those charts. You can download all the charts from tonight's video. Just follow that big button right below the video tonight on our blog to get access to all the charts and have those on your computer for tomorrow. And don't forget, if you have any questions about anything covered in this video tonight, please remember to post them in the comments section below. We also have a toll-free phone number and a live support tool in the upper right-hand corner. If you have any questions, you can always hit me up on live support. And don't forget, if you like what you see here, please help support this channel by subscribing. And when you do, hit that bell icon so you get notified every time I post something new. And as always, it is great to be back here with you guys and gals. Had a great weekend. We're back in the action though. Let's not waste any more valuable time. Let's get ready for tomorrow's trading session by taking a peek at the schedule here for tomorrow. Now, it's important that we take a quick inventory of what happened over the weekend. Let's see here. First of all, OPEC. Right, OPEC. We have a very highly anticipated OPEC meeting coming on Thursday. That is a scheduled meeting. That is not an impromptu meeting. It's been on the calendar for a long, long time. That's on Thursday, and of course, on Thursday they're talking about 2019 production targets. Well, sure enough, this weekend, the country of Qatar, right? One of the, well, let's put it this way: it's been almost 60 years since a Middle Eastern OPEC nation, right, a major oil-producing nation, decided to leave the cartel. We heard that late in the day on Sunday, early Monday, and that really shook things up. So OPEC, right, is it's being shaken up right now, and we got the country of Qatar announcing this weekend they're leaving OPEC. I would assume that means that they don't want to participate in these production cuts, which is what's most likely coming down the line, because right now experts are saying we could dip into the 40s, the high 30s before the end of the year, right? If not the end of the winter. So we're definitely looking at OPEC. Big news, sensational news about OPEC leaving, about Qatar leaving OPEC just a few days ahead of that meeting on Thursday. So that's in play right now. What else did we hear about here over the weekend? We heard about China, right? As our president would say, right? We heard about China over the weekend, right? What happened? Apparently there's a ceasefire when it comes to tariffs. 90-day trade tariff. No fire zone or truce or whatever you want to call it. It's only temporary, but the market really reacted very bullishly on that. And of course, I think that news out of China is kind of it's been back and forth all week. We haven't really heard. We heard it from Trump, we heard it from their prime minister, but we've heard a lot of conflicting stories here. That may fizzle out as we go into the end of the week. So this big push up we've got on global markets may come back down if that starts to fizzle out. What else happened over the weekend? We could keep going, right? Bush is on our list here tonight, right? May he rest in peace. Our 41st president here of the United States, George H.W. Bush. That was W's dad, right? Not George Bush, George H.W. Bush, right? The prior Bush. He passed away, and he was in his late 90s, right? May he rest in peace. It is commonplace for there to be a national day of mourning when a U.S. president dies. The last time this happened was over 10 years ago when Ford, I believe it was, in 2007 died, and they have a national day of mourning scheduled on Wednesday. Now, this kind of took me back a little bit because, I've been trading for a long time, but, 11 years is 11 years, and I can't recall what the personality was into that national day of mourning. It was a long time ago. So bottom line is, anytime what they're doing is they've basically closed. NYSE is closed. Nasdaq's going to be closing. CME Group is going to be closing. So you're not going to see this on a lot of calendars. And right now, they're kind of shifting all this stuff around, right? The beige book is supposed to be coming out on Wednesday. That'll get pushed back. So things are really going to get what's the word, kind of shuffled around here, probably moving news events into Thursday and Friday. So a big deal. I mean, this is huge. It's huge because anytime we close a day, right? The last time we had a market closing that was unscheduled, I believe it was the hurricane, right? A couple of years ago. It was I can't recall now the name of the hurricane, right? But you know what I mean, right? It affected the whole East Coast. Maybe if you guys recall the name of the hurricane, post in the comment section below. That was the last time we had that, hard close. And what happens is, because we know about the markets now, again, this is U.S. markets on Wednesday, because we know the markets are closed on Wednesday, that moves everything either up or back. Which means now, tomorrow, there's a tremendous sense of urgency, right? Because now, I know that you and I, right, we manage our own money, right, in these markets, but for the vast majority of the marketplace, these are asset managers with client money on the line, and this really puts them in a pinch. Remember, the market makers, the people who actually make these markets move, as well as the exchanges, they try to keep the exchange open as often as can, because when it closes, whenever there's no access to the markets, there creates this sense of scarcity and urgency, and it creates a very difficult, very illiquid environment. So that's going to lead into tomorrow. That's a big deal, right? So a lot of these things are kind of piling on top of themselves right now. We've got OPEC regarding crude. We've got China, right, regarding the pretty much everything right now. And of course, we got Bush, again, may he rest in peace. But boy, is he really putting us in a pinch, right, literally on Wednesday, where things are getting moved forward, a sense of urgency tomorrow. And then, of course, when we come back on Thursday's now that catch-up day, right? Now, Thursday is a day where we're going to play catch up. So I haven't quite. Well, this is gonna be a pretty interesting week. Let's put it this way. Tomorrow is expected to be a very active day as traders get out of positions, right? Get into new positions to hedge ahead of that day off, right? That kind of forced day off on Wednesday. We come back on Thursday. It'll be a catch-up day on Thursday. Literally, whatever's missed, the U.S. markets will catch up. It's going to probably be a really, really chaotic day on Thursday. And then, of course, we go into Friday. Now, Friday is, just in case you wanted some more stuff going on, Friday is the non-farm payroll number, right, on Friday. So, man, oh man, what a hell of a week we got going on. So, a lot happening here this week. Now you know the soap opera, right, that it's kind of developed here over the weekend. What's the plan for tomorrow? expect a sense of urgency. That urgency could be a big flash in the pan right at the beginning of the day, and it could fizzle out by the time we get closer to lunch, as traders don't want to get stuck into this close on Wednesday. Markets are closed on Wednesday, so they got to get their business done on Tuesday, or they've got to wait and come back on Wednesday. Will that cause traders to abandon the day tomorrow and just say we'll get back at it on Thursday? Right, little extra chance to get some holiday shopping done, right? Or will everybody really cram everything into that day? I couldn't tell you, right? Like I said, I can't recall the last time. I know when it happened, but I honestly, that was a long time ago. I can't recall what happened that day before, but I know the day after will definitely be kind of a catch up for what happens in the global markets on that kind of forced day off. So tomorrow's very much a big question mark for us tomorrow. Tomorrow night, I'll do my newsletter, and we'll ultimately be getting ready for Thursday, which is never a dull moment, right? Never a dull moment. Now, as far as news goes, there's not a lot to worry about tomorrow. We got some news out of China tomorrow night, General Services PMI. We've got some inflation numbers tomorrow night. So gold and currencies are definitely on our list tomorrow. But other than that, tomorrow's pretty much the quiet day of the week. But I'll tell you, tomorrow might be anything but quiet. So what we're going to do is this. We're going to open up our trade room tomorrow morning at 8 o'clock Eastern Time. And we're gonna do what everybody else is gonna do tomorrow. We're gonna play it by ear. If it's fast, if it's exciting, we'll have a great day. If it's slow and sluggish, and we're dealing with kind of choppy ranges, we'll fade those breakouts. And no matter what we get tomorrow, we're gonna be disciplined. We'll be patient. We'll be open-minded to whatever we get, and we'll be kicking things off tomorrow morning in our trade room, 8 o'clock Eastern Time. And then we'll kind of plan for Thursday and Friday in tomorrow night's newsletter. We'll just take it one day at a time this week, because if you try to just, you try to eat the whole elephant, right, you're going to choke on a bunch of elephant. One bite, right, one bite at a time. All right. Sorry about all the hoopla beforehand. Just want to make sure you know what's going on here. Now, let's get this party started here tonight. We got crude, S&P, Nasdaq, gold, and we can't forget about the mighty euro. Crude is bullish with a flag pattern tonight. The bull bias tells me to focus on buying opportunities using support levels, and the flag tells me to use the high of this bear channel as a key level of support. Now, my plan is to look for seller failures down below the moving average using the high of that channel, right, as my key support level right now. There's a couple different ways to look at this. There's a few different things to look at. I think the most obvious is there's a big gap up, and a lot of these markets gapped up, mostly because of China. I don't think this gap up on oil was because of Qatar leaving OPEC. In fact, I would have assumed that with Qatar leaving OPEC, that would mean we've got less control of production, and therefore pump, drill, baby, drill, more supply, right? Now that countries are no longer having to play with the OPEC mandate, and we may see these prices come down. I think this is just because, like we've seen the last couple months, anytime we hear the word China, right, the market jumps, and then a couple days later, the rumors kind of fade away, and the market dumps back down again. That may be what's happening here right now. That's what I think is what's happening right now, right? So we get strong move higher here, right? Think of anytime we see a big gap, it's just a big green candle. Right? A big gap up's a big green candle, big gap down's a big bear candle. And a lot of times what happens is when we have these gaps up, they gap up and they go into a flag. And that's what this is. This is a bull flag. Now, we talked about this last week. If you watch the newsletter religiously, you already know this. But anytime we see a strong move up, right, and then, of course, we start pulling back slowly and methodically, this is called a flag pattern. And, really there are some very simple ways to trade it. My favorite way to trade a flag pattern is to wait for a strong move up and then try to use the top of that, right, of that channel as a key level of support. One thing you've really got to remember is the two main objectives. One is to go back and retest the high, and the other is to use the measured move, A, B, C, D. Right? So right now, as I go back to my chart right now, strong move up. There's my flag, right? There's my kind of channel, as you would say, right? My flag is what they call it. The first objective is the buyers want to get back up to retest that high at 86. So that's ultimately what we're really working with right now. Then if we get a bigger move, we go through it, it's 1, 2, 3, there's your measured move. 55.47 is that, right? Is that big measured move. So right now the buyers have the slight edge. It's very slight right now, as with all flag patterns, and we know those buyers are trying to get back up to 86. The bulls have the bias, so I want to buy at support, and I've got some key support levels, 1 being this trend line, right? 2 being the top of that channel. I'm also marking up that prior swing high because that can act as what was a level of resistance, can be used now as a level of support, right? A level of support. So I really like this whole area right up in here, right? Really like that area right there because that would allow us to use the top of that channel, right? The trend line, and maybe, right? Maybe if we get lucky, right? That prior swing as well, if it comes in play, right? Quickly enough here. So as we go higher here, I want to buy at support levels, and as I pull back to a level of support, I will undoubtedly be below the moving average. Pulling back to a level of support below the moving average, I'm going to look for a pattern that looks just like this. It's what I call the 1 try, the 2 try failure into a hidden channel pullback. So now imagine now we pull back below that moving average. Right? Buyers, of course, now are waiting to buy low. But when we pull back below that moving average, the sellers here now, much like they did back here, they're going to try to sell the pullback to that moving average. Right? That's great because now we know the market's bullish. We know the odds are not very good that these sellers are going to be successful. They might be successful, but the odds aren't very good. And so I'd rather have those odds on my side, right, not on the sell side. And so I'm going to look to buy right into those stop losses. Right? The entry on that will be with a 2 try failure pattern. The entry would be here right above that high. Now, from there, we don't want to buy high here. We don't want to chase after this move now. And we also don't want to get roped into buying as it goes into that high. So what's the plan now? Well, now what we'll do is we'll find that new channel. I'm going to mark up the channel off those highs, bring it down to that low. I'm going to look to come to buy that pullback now. And what I'm looking for here is looking for that buy off of the low of that channel, but I'm also watching that original swing, right? In this case, right, it's that prior swing high. So again, as we pull back here, I'm looking for a 1, I'm looking for a 2 try failure pattern. That 2 try failure will trigger above that high. Then again, mark up that channel, and then that's a horrible drawing, Joe. And then we're going to look for, right, a way to buy that pullback. This is what I call a 2 try failure, right, into a hidden channel pullback. So that's my plan for this as a flag pattern. Now you might be wondering, well, what happens if it keeps going higher, Joe? Right? What if it doesn't pull back here for us, man? What if this thing keeps on pushing higher? Then what do I do? Well, at that point now, we've got to really be careful. We don't want to buy into the high of this range, and anytime we find ourselves too high to buy, right? Too high to buy, we want to look for one specific type of pattern. What is it? Traps. Look left, find that prior swing, and this is where, right, that trend line may come into play. We look for a little tiny trap. What is a trap? A trap is a slight pullback just below a prior bull swing. All we need is that nice strong signal candle, and that is a beautiful opportunity there for a trap setup, right? A trap setup. So now we've talked about the 2 try failure. We've talked about the hidden channel pullback. We've talked about the trap pattern, right? What if price goes sideways here? Aha! What's your response to that one, JJ? What do you got there, buddy? What if we don't go higher? What if we don't go lower? What if we go sideways here, right? What if the OPEC news paralyzes things tomorrow? Then what do we do? We look to go with the momentum, buying at support, right? Where would support levels be? Well, there's a level of support. There's a level of support, right? What if we try to use these levels of support in combination with a failed breakout? What I call the 1, that's 2, Joe. No, the other 1. There we go, right? 2, and then back up in, right? We call this what? The 2 try failure pattern. Let those bears try once, let them try twice, and then we'll buy right back up into those stops. So that's the plan, right? Whether we pull back, whether we go higher, whether we go sideways. What about a reversal? What would a reversal look like? Well, we need to get what I call the 1, 2, 3 reversal, right? And I always kind of joke around with you guys by saying there's an exclamation at the end of that, because that's exactly what we need, exclamation. I need 1, strong move against the trend, 2, a pullback to the moving average, and 3, a strong move right off of that low. If we can get that strong move off the low, now we've got ourselves a new channel, and now we're going to look to sell off the top of that channel. Now, if we can get this sucker reversing and then, right, get a chance to sell off that high, where's the target going to be? Yeah, target is back to fill that gap, right? That is the closing price last Friday at 72. Okay, now remember, be very careful. Don't try to force the trade short. Okay, a lot of times rookie traders, myself included when I was a rookie, I would constantly make that mistake of trying to fill the gap. But remember, the gap says momentum, right? This big gap up does not say fade, right? This says strength, momentum, right? It's only when this thing turns momentum direction, that's when we start using that, right? That gap, right? How to trade those gaps, right? Remember, anytime you see a gap on the chart, right? Think of it as one big candlestick. Right? So if you think about a bull gap, right, a bullish gap, it's a big gap up, strong momentum. We don't want to try to sell this thing until that momentum actually changes hands. Once it does change hands with the 1, 2, 3 reversal, right, then we know, let's find that new channel, right? Let's sell off that channel, and then the gap, right, gets filled, right? Then the gap will be a sit and duck. It'll be an easy target for those sellers. Don't make that rookie mistake and think that all gaps got to get filled. You're right. Most gaps do get filled. It's the time frame for when they get filled. That is what we don't know enough about already. Now, guys, we have covered a lot in these first 20 minutes of this video. We've talked about the 2-try failure, the hidden channel pullback pattern. We've talked about traps, reversals, gap fills, and everything in between. I want to keep teaching. And I got a great free resource for you. If you want to learn more of my favorite entry patterns, grab that free trading class. I'm going to link it up in the upper right-hand corner. If you're on the blog right now, there's a big red button right below this video right now to grab that free trading class where I'm going to teach you more of my favorite patterns. But most importantly, you'll see hundreds of real examples of these patterns that I talk about every night on this newsletter. Because right now, I'm just drawing them up for you because we're going to do this together tomorrow morning in our trade room. But I want to show you more, and I'm going to keep moving. A lot more to cover tonight. I want to make sure you grab that free trading class, though, because you're going to learn a ton right inside the member section of our website. So grab that free class. You will not be disappointed. In the meantime here, though, let's push forward because I want to make sure we're ready for tomorrow morning, and I realize I'm getting you guys a little bit late here tonight. It's a busy day in the office today, so I want to make sure we get this thing done. How about some S&P? S&P is bearish with a trading range tonight. The bear bias tells me to focus on selling at resistance, and the range tells me to focus on selling above the range using buyer failures. This is a relatively simple idea. It's a bear market going lower, but we're no longer making lower lows anymore. Now we're seeing the market overlap and start going sideways, right? The market's bearish and then it starts going sideways. Okay, this is basically a bear market into a trading range. And what I'm going to do is I'm going to find that range and focus on selling above that range. With what pattern? With the 1, with the 2, what we call the 2-try failure pattern. Okay, and how do I know where to sell? Well, good question. I'm going to look left. I'm going to find prior swings. That's a level to sell. 1, 2, but more importantly though, if we get that trading range nailed down correctly, I can take the size of that range, copy and paste the size of it higher, and then use that as resistance. So a lot of times what you'll see me do is I'll put this level on, and then I'll also have that range expansion level as well, right? And that will be the sweet spot for us to be looking for those sells, right? 1, 2, and then back down. All right, so as we go lower here, bear market into that trading range, right? Take the size of that range, copy and paste it higher. There's my key resistance around 28.05. Look left, find some prior swings. So this whole area right here is absolutely where I want to focus my energy on right now. There is a rising support trend line, right, coming up off that low. I'm not too worried about it because I'm not going to be selling down there anyways. I tend to subscribe to the idea that less is more on my charts. When I was a rookie trader, I used to load my charts up with every single level of support and resistance. But over the years, what I've learned is the less I have on this chart, the more I can pay attention to, right, each individual level. And that's why you'll see my charts tend to be relatively minimalist, right, with as few tools and as few indicators and drawing tools as possible. That way I can really focus on what I do use, because in all reality, it's not what we don't use that makes us successful. It's the stuff that we do use, and I don't want to have too many of them. So the bottom line is we still have that range to worry about, right? Here's that range here. And again, I want to use what I call the two-try failure pattern. I just want to get up above this range. That's the key right now. I want to go up, let them try once, pull back to the moving average, let them try twice, right? And then we'll try to sell back down. Once we have those buyers trying once we see the buyers trying twice, then we'll start looking to sell into those stop losses. Because remember, once we crack below that kind of middle between the twos, that's where we'll start seeing stops come in, right? That's where buyers who are trying to retest that high, that's where those buyers are going to get out with a loss, and it should come crashing back down. Now you'll also notice, right, again, a gap here on the S&P as well, right? This time though, there's clear momentum shift here, right? Strong move, clear momentum shift here. Very different feeling on oil, which was still bullish, right? At least for now, right? And the S&P. The S&P spent very little time as a bull market today. It was most of the day today, right? It was a bear market. Now, will that gap get filled? Remember, anytime we have a gap, we first want to make sure we turn, right, that market direction. There's a 1-2-try failure pattern right there that undoubtedly got its 1-to-1 target, right? If you take the size of the risk, the reward, right? They got their 1-to-1 target, but couldn't get the rally or the collapse to finish off that runner. So we already got 1-2-try failure. That didn't succeed at filling the gap. Will we have to go higher for the 1-try, 2-try, and then back down in? Now, if we get the 1, the 2, and then back in, we look great. Right? What if we go back in and we sit inside the range? Then what do we do? Not much changes. We still wait. 1 try, 2 try. If we go back into that range again, we still wait. 1 try, 2 try, and we're back down again. 1 try, 2 try, and then back down again. Not much changes. Now, how about as we go lower, right? What if the market collapses lower, fills the gap, then what do we do? We have two basic choices from there. If the market collapses and goes lower, we're ultimately looking for either a nested 2-try to be a buyer, right? Kind of using a 2-try, right? Kind of like a 2-try on steroids, right? It's a strong move down, fill the gap. It's an overall bear bias, and so I don't want to be a buyer unless I let these sellers exhaust themselves. So what I'm going to do is I'm going to use a variation of that 2-try failure, which we call the nested 2-try, which is where now we look for a 2-try inside of that second try, right? If you can look at it this way, right, that'd be 1 try down. The second try is coming, right? In the meantime, though, kind of think about this as maybe a little smaller example here, right? Like this, right? Now we go in, we go, okay, 1 and 2, right? It's kind of a 2-try inside of that second try. Again, so we call it a nested 2-try. That will usually, right, put us just above that moving average with that strong signal. Well, if that buy going back up. So again, that is if we fill that gap, right? We finish off that move down. Don't just buy it as it goes lower. Wait for it 1, wait for it 2, and then we can buy it now going higher. But what about the sell side, though? Could we sell this? What would it take to sell as we're going lower here? Well, remember, we got that range, right? And that range tells me be very careful selling breakouts, especially with that gap, right? That gap waiting to get filled and that range expansion level just above that 2760. So what do we need to feel confident to start selling if it goes lower? We've got to get through this area here, and through it, I mean on strength. 1, 2, 3. Remember how we said before the 1, 2, 3 reversal, right? If the market is bullish and running higher, it takes a 1, 2, 3, right? And remember, it takes a jump, right? That second leg has to be strong. That second leg has to be strong, right? Or else it's not going to be enough to shift the momentum of the market and give us a reliable opportunity to be a seller. So if I just see this thing go strong, move down, then pull back, I can't sell that. It's more likely now going to fail and go right back up, which we'll buy with the right entry pattern. And if they try to push it lower, you be very careful as it goes lower, because you're right at support, right? At the gap, right? At the measured move, at the low of that range expansion. So it has to show us some proof. It's got to prove it to us by going through that range on strength. Then I can mark up that prior low. I can find the new hidden channel, and we can try to sell off the top, right, of that channel. Now, this could get pretty good here, right? This could get pretty good if this really collapses here, because you'll notice, right, we get a big dip down to that 27, 23 and a quarter area. If this thing, right, if this thing really starts to throw a fit here, right, as we go lower. So we'll be keeping our eye out there for the reversal tomorrow. It's really, though, important, though, we get through this area. I like the idea of a buy off of this area, but I'm not married to the buy side. I will definitely look for a sell if we can push through it. Again, don't forget, if you want to learn more about the 2 try failures, the 1, 2, 3 breakouts, make sure you grab that free trading course. It's linked up in that information icon right at the top of the page. If you go to the top of the page there, a little information icon there, grab that link and get registered, and I'll see you inside that free trading course. Now, over the NASDAQ is almost identical to the S&P. In fact, the NASDAQ was a nice, easy leading indicator today in the trade room. The bottom line, though, is we know we're bearish, right? You can easily see that bearish momentum to it, and you can see we're going sideways right now, right? So that's our range. I take that range, I copy and paste it up. That's resistance. I copy and paste it down. That's support, and those are the key components. Okay, it's a bear market with a range, which means bears, right? Bear market says sell at resistance. Easy to find levels of resistance, right? The range tells me use the 2 try failure, 1, 2, back down in. The range tells me that if we do go lower, be very careful trying to sell down here. In fact, I'll look for that nested 2 try, that strong move down, followed by the 1, the 2, and the buy back up. Right? If it sits inside the range, we're going to sit on those hands, keep focused on 1, 2, sell back down, right? Or 1 and then nested, 1, 2, back up, right, into that trading range. What would a breakout look like? What does a breakout look like? The 1, 2, 3 breakout is very similar to the 1, 2, 3 reversal, right? The 1, 2, 3 reversal, the breakout, 1, 2, 3, right? Strong breakdown. Find that new channel, and we can sell off the top of that channel, right? The hard part on that move lower will obviously be that gap. So trying to get this market to reverse, I'd really like to see some real strength outside of that range, get below that 7,000, then we can get serious about looking for entry opportunities off the high of that range. I will not be surprised whatsoever if we run and then work our way right back where we came from. So watch that as well. Remember, a strong move down is not enough to qualify a breakout. It has to pull back, right, and give us another leg before we can feel confident with it. So we're watching for breakouts. We know what a breakout looks like. It's a 1, 2, 3, and that explosive move higher. This is obviously not drawn to scale, but it needs to get through that 7,100. It's got to push that range expansion. Got to push the range expansion. If they can push through it, then I'm perfectly comfortable being a buyer here. Find that new channel, right? Find that sweet spot. We'll buy the low of that, right, of that channel as we go higher. So bear market says sell at resistance. I've got key levels of resistance overhead. Range-bound market says to try failures. Either a go with the trend, right, or it be a nested to try, a counter trend. And of course, again, watching for the 1, 2, 3 breakout. And don't forget, if you want to see hundreds of examples of real patterns that we see every day in our trade room, right, grab that free trading course. It's linked up in the description of this video. Let's keep going here. Now, over to gold here. Gold is bullish and finishing today's session with a trading range. The bull bias tells me to focus on buying at support levels, and the range tells me to use the range expansions at key levels of support while using the to try failure pattern to fade those breakouts. Now, a couple things you can look at this on this chart right now on gold. At first glance, it looked like it's obviously a bull market, and it's pretty easy. I think everybody can see that, right? If I get rid of this though for a second here, right? This bull market pulled back, made a new higher high. This could easily be a spike and channel. Now, if you were here last week, you may recall last week we talked about spike and channel patterns, right? The 4 ways to trade a spike. And of course, or 5 ways it was last week, right? What do we always talk about when it comes to a spike and channel? It was look left, find the base of that channel, right? That first pullback and the base of that channel, because that's usually where you're going to get, right, the best pullback opportunities with a spike and channel. If you look at this as I think it's a range, but if you want to call it a spike and channel, right, where is that? That pullback is right here and right here. So if you're calling this a spike and channel, which I can easily see why you would, we now know it's that 33 area here, right, that we're trying to get that deep pullback, right, to go into. You'll also notice I've taken these 2 highs, brought it down to that low, and kind of created that little hidden channel here. So there really is a great opportunity here if we can get that deep pullback. If we get that deep pullback, usually a real deep pullback will mean a nested to try. For example, here's a shallow pullback, right? Shallow pullback, 1 try, 2 try, bingo, easy pattern, really easy pattern. If it was to pull back twice as deep though, that momentum would get really strong. And so you'd want to wait for that nested 1, 2, and then back up, right? Momentum, strong momentum down, 1, 2, nested, right? Back up. Let them try once, let them try twice after that strong move down. That's a pretty easy buy now as those sellers get run over and the price runs back up to retest the high. We may not get that though, right? Because when I look at this, I see double tops up here. Right, I see flat moving average. Yes, this was a bull market, but it looks to me like they finished off this day instead of a range. So as always, bull market tells me buy at support. Trading range tells me, right, project the high as resistance, project that low as support, right? Support below, resistance up above. Okay, I want to buy at support levels down here, so I'm focusing on that support level at 34.6. Right, as I mentioned a couple times before, I like to use that range support along with that prior swing support, and that really creates that battle zone that I want to use as a key level of support. So really now it's kind of either 1 or 2, right? It's either that 1, 2, right, shallow pullback to try, or it's that deep pullback now with that nested 1, 2, right, and then back up from there. Now, what if it doesn't give us that, right? What if this is just a trap and we go right back up into that range and we're sitting here tomorrow morning? If that's the case, then so be it. We're still bullish. We're going range bound. We're still looking for that 1, looking for that 2, and then back up. Or if we get that real deep pullback, that nested 2 try, right? Again, you'll learn more about 2 try rules, nested 2 tries, all the details are included in that free trading class. So grab that right in the description of the video or linked up below the video on our blog. What if the market keeps going higher, right? What if it keeps going higher? If it keeps going higher here, now not a lot changes, but we know it's not going to be a range, right? If it keeps going higher here, now we're basically now looking to buy the low of that channel, right? Buy the low of that channel. But at the same time, though, we're really looking for a nice deep pullback, right? Nice deep pullback, get that nice deep pullback eventually, 1, 2 try failure, and then back up from there. So if it does keep going higher here, just keep on waiting patiently for that pullback. I have learned over the years that waiting for the pullback is a much better option than trying to force trades, buying high, chasing the move. It's a lot easier to make money that way. Now, last but not least, what would a reversal look like? A reversal requires a strong move against the trend. That's not enough though, right? Because if those sellers can't hold here, we'll be buying right back up again. Strong move against the trend. Then what do we need? An explosive move off that moving average. It needs to feel like there isn't a buyer in sight, right? Let those buyers walk away, let it drop off, right? And then we'll find that new hidden channel, right? We'll find that new hidden channel and we'll sort of sell off the top, right, of that hidden channel. If we can get short off the top of the hidden channel, nice easy target waiting for us down at that 21.8. So relatively easy plan there on gold. Buy low, be careful buying high, right? Stay away from that range high and fade those breakouts, those bear breakouts. Wrapping up tonight now on the euro. Euro is neutral with lower highs, higher lows, and a flat moving average. Must be a range, right? Must be a range. Now, when I see a range, I know my plan is pretty simple. Buy low, sell high, avoid the middle, fade those breakouts. And how do we fade those breakouts? We use the 2-try rule to buy low and sell high. Now, I wanted to make sure I point this out to you so you kind of know what the extremes are of this range right now. Because whenever you have a triangle, just so you know, triangles and ranges are triangles and rectangles are the two most common types of ranges, right? Triangles are fairly common, but the rectangles are definitely more common than triangles. They are ultimately traded the same way, right? You buy low and you sell high. Price goes up, we sell it back down. Price goes down, we buy it back up. Same thing, down, buy it back up, right, sell it back down. The only big difference is, the key difference is that a trading range can go on for days on end. In fact, earlier this year, we found a couple weeks there where the euro and the gold stayed inside the same range for weeks. The one big difference in a triangle is that can't happen because eventually that triangle is going to come to head here, and eventually now this thing will break out, right? So there is a time limit on a triangle. Very, very important, right? Once we start getting into that little tight area there, we expect to see an explosive move, right, as this thing gets narrower. So that's one key difference. Another key difference is between a range and a triangle or a rectangular triangle is the reason why I brought this up, is because you really want to focus on those edges, right? Find those pivots. Okay, make sure they hit the triangle. Don't worry about pivots in the middle of the triangle, but really focus on those edges so we can then buy, right, below the low, sell above those highs, using those edges. So when I look at this now, I can see lower highs, I can see higher lows. It's easy to see. It could be bearish, it could be bullish. It's pretty much neutral. Now, you want to know where these edges are, right? There's one edge, there's two edge, there's three, and there's 4, okay? So obviously, there's 5 right there, excuse me. So if I zoom in now, right, if I zoom in a little bit closer now in this chart now, you can easily tell where the most important edges are, right? They're up here, they're up here, they're down here and here, right? So those are the important edges. Now, once we know that, right, we got plenty of space here right now. Again, we don't start getting too worried about the triangle breakout until it gets narrower here, right? What I want to do is I want to get up around that edge, right? Up around that 13,900, 4,000. I get that. Again, it's a range. I want to sell high, I want to buy low, and fade those breakouts, right? So as we break out, I want to sell it back down in. The problem, though, is, right, and we saw an example back here, right? Good example here. When we have a strong move higher, it's really difficult just to sell that. So what I like to do is, and what I teach my clients to do, and we do together every day in the trade room, is we wait for those buyers to buy it. And then once they fail, then we know we can sell into that failure, right? For all I know, if this market races higher here, this could be a successful breakout, right? They could hold that pullback and run. And if that's the case, it becomes a successful 1, 2, 3 breakout. We'll find our new hidden channel and we'll buy the low of that channel. That's perfectly fine. Okay, I'm not going to buy the breakout. I'll buy the pullback after the breakout because that's a lot more reliable trade, as we talked about last week, comparing percentages, right, to profits. So what I'm going to do is, much like we saw back here, I'm going to wait for it to go up. I'm going to wait for it to pull back. I'll then look to buy the pullback. Sorry, I'll wait for the buyers to buy the pullback. And once we know they're long, then we know their stops are. This becomes 1, that becomes 2. That's a 2-try failure, and we're selling right into those stops. Same thing to the downside, right? Because we're neutral, I'm going to buy at support and sell at resistance. We go lower, 1, 2. Right? Let those bears, let them try once, let them try twice. And again, let this thing try to break out. Wait for it, wait for it. It'll eventually pull back to the moving average. Once it does, let them try again. Then we know where their stops are and we can buy right into those stops, right? Or maybe we get a real strong breakdown, right? Real strong breakdown. If we really get a strong breakdown, right, that momentum's too strong, we can look for the nested 2-try, the 1, the 2, right? And just let it, right? Let those sellers exhaust themselves, and then we'll buy into their failure, right? It makes no sense to try to predict the bottom down here because most of the time it'll run you right over, right? So don't try to pick the bottom, right? Don't pick the bottom, pick the better entry. Let those sellers try twice, and we'll buy right into those stops. Stay away from those middle, buy those lows, sell those highs, and again, 1, 2, 3 breakout, 1, 2, 3 breakout, find that new hidden channel, right? And we'll use the top of that channel for our follow-up trade from there. Now don't forget, guys, I've covered a lot here this evening on our nightly newsletter, and we're going to take this plan and put it into action tomorrow with all of our advanced members in our trade room. If you'd like to come out and join me tomorrow as a member of our trade room, grab your advanced course package right on the homepage of our website. If you'd like an invite to come out and join the trade room as a guest next week, make sure you grab, or this week, excuse me, right? Grab that free trial. As part of my free trial, I have a great free pass for you. Come out and join me in the trade room. That way you can see exactly what it feels like to be behind the scenes as a client here in our trade room. If you have any questions, don't forget, you can always pick up the phone and call me toll free. I'm always here standing by to answer all your questions. You can learn more about our 3 levels of membership on our website. And as always, get a great frequently asked questions page, right? Grab that frequently asked questions and learn more with our FAQs. Boy, what a great day we had today. Tomorrow, a big variable, but no matter what happens, we've got a great plan. I'll be with you guys tomorrow morning in the trade room. I look forward to seeing you there. If not, right, be careful tomorrow, and we'll come back and do it again tomorrow night on our next edition of our nightly newsletter. My name is Joseph. Be well out there. Be nice to each other, will you? Stay warm too, man. It's freezing here in Los Angeles. I won't complain though. I know you guys are dealing with much worse over there. We'll see you guys tomorrow. Adios, amigos. Bye-bye for now.